Hey everybody, welcome to Trading Caps exclusive analysis, another natural gas update here on December 7th. We're also going to be touching base on oil, starting with the Widowmaker. Yet again, the Widowmaker closed down by 0.71%. Will natural gas ever catch a bid? You can see that today. There's a little bit of a difference in the price action today. Why is that? Well, the difference is you had your big red bar down yesterday on that over 5.5% drop, and you made a low. You made a new low today, but you actually rallied and closed back inside yesterday's wick. Now, this price action just got that much more oversold. Obviously, oversold conditions doesn't guarantee a bounce, but it certainly adds to the probabilities that this is an important commodity for the world and we could see a bounce. What's important today is you did get natural gas inventories. The forecast was a drawdown of minus 105 billion. We actually came in at a bigger drawdown of minus 117 billion. So therefore, technically, the demand and the consumption, sorry, I shouldn't say the demand, the consumption has been a little bit higher than the expectations. So could this be marking a near-term low in the natural gas chart? There's certainly a possibility, but this is still exceptionally weak. I still am in the camp. We are entering based off of some RSI divergences. Look how oversold we are. You can actually argue, just due to the overall drop here and how far you are extended from this yellow RSI indicator in comparison to where you hit here, you're actually more oversold than this little trajectory and sell-off that occurred basically at the start of 2023 here. So I think we're in the camp based off of RSI. If you look at the low that we made down here, we are approaching that low in a more oversold condition, more stretched from the yellow RSI indicator. I think that we are going to yield a bounce of this nature, something very, very similar. I don't think the actual low is in natural gas. I just think there's a tradable bounce here. Believe it or not, I do think we go lower. But if we throw on the 7-day moving average, which is in yellow, and the 20-day moving average, these are simple moving in blue, you can see how far stretched we are from the 7. I expect at least a little bit of a bounce off of this inventory report, at least to tag this 7-day moving average and maybe close above. If you notice how here we had that big red bar down, then you did eventually bounce on that extremely oversold RSI indicator. Again, that bounce yielded about a 13-14% bounce, but it put in bearish consolidation and then actually made lower price action. I am just in it for this small little bounce. I do think that we're close to a low, but there's a potential that we could actually go a little bit lower on the chart. I'm eyeing up. There's one little gap fill down here that still has not technically been filled to the downside, and I'm watching that very closely, the 221. But here I still think there is a great risk to reward entry on the long side for Nat Gas, and I do think that we could get a big sharp rally in the coming sessions, that takes us to about a 5 to 12% rally in the near term. Obviously, natural gas is called the Widowmaker, so you have to be positioned accordingly. But I do think that we eventually bounce over here. The price action that I have mapped out is basically a bounce somewhere in between, somewhere above the 7 and below the 20. And then once we have that bounce, I think we actually get one final capitulation sell-off in natural gas before we break out to the upside. So hopefully that analysis helps. Again, definitely use position management in this specific trade. It has a tendency to overshoot in both directions, so you never want to go full port on one specific technical level. All right, let's look at oil, because oil finally eked out a small gain today, up 0.5%. It was a little bit of a disappointing bounce in oil. Why is that? Well, oil's coming from an extremely oversold condition. You can see you just tapped that oversold boundary on the RSI. The last time we tapped it was really down here on this wide range red bar candle. Then you had a flush out and a huge reversal candle on oil. We didn't get a big reversal candle in oil. The volume is starting to uptick. We are right at that downside level of this head and shoulders pattern, but you have triggered much more downside in oil after I think we get a bounce. So Maybe we need to flush down to this neckline yet again before we get a bounce. But again, oil was kind of weak today. I hold no trade in oil at this time. I'm looking at energy companies, but I want to see oil really flush out. I don't think we've seen that capitulation bottom, kind of like here, where we had that big volume spike, a very oversold RSI, and then we had that big wick to the upside. But oil was disappointing. It only finished up 0.5% today, despite the dollar down. The dollar was down by 0.5% today, and oil couldn't even really get a 1% bounce and hold most of the gains. That's just showing you that perhaps there's a lot of underlying economic weakness that is creeping into the global economy. Obviously, as a consumer, I want oil to keep going lower and lower and lower because that helps with my gas prices. It helps with the inflationary pressures. It ultimately gives companies in the S&P 500 better margins. But nasty, nasty price action, certainly in oil. It did eke out that small gain, but I am expecting it to go a little bit lower here on the charts. Definitely give my Trading Capital Discord a follow. My website is tradingcapital.ca. I host a day trading and swing trading service. I post insider analysis, daily analysis videos for my members, and a whole host more of information. If you found this video useful, please give it a big like down below. Comment. I'm always open to hearing other people's opinions. I love hearing contradictions. I've had many people agree with me, many people that disagree with me, and that's the part that makes it a market. Stay tuned for more, and we'll see you on the charts a bit later.